All right, everybody, welcome to our show today. This is Hot Topics in Real Estate, and I'm Rob Wachter with the Wachter Group in Jay Park, Carolina Living Realty. Today, we want to talk about a topic that's a real issue in today's market, which is home inventory and how to make a move with so much competition out there. So we have invited Dustin Davis of Knock to be our special guest today. So we're going to talk about a program that many of you may not know about that is not available to every single person through every single realtor in the market. So this is information that you're going to want to have. If you are a homeowner now and are thinking remotely about making a move up, a move down, then this is a show that you're going to want to watch. If you are watching this live and you have questions, please drop your questions in the comments. If this is something that sounds interesting and exciting, we encourage you to share this on your page or share this with other people. If you happen to be watching this on a recorded version, whether that's on YouTube or Facebook, just drop your comments or questions in the field below the video, and we will get back to you with those answers as quickly as we can. So again, thanks for being with us today. We're going to get started now. And first, I want to introduce to you the Wachter Group. There are 4 agents right now on the Wachter Group's team, and it's important in today's market. Real estate is really difficult to come by. There's so little inventory and houses come and go real quickly. So number one, it's important to have agents that really understand that and know how to help you bid. And number two, it's important to work with a team that has more than one person available to possibly show you a house, because the reaction time and response time is so crucial. So Mel Birch, Casey Hart, and Erica Wright are all Knock certified agents with our team. And we'll talk a little bit in a minute, and Dustin can share with you what Knock certified means as far as working with an agent. So any one of us are willing and able to help and help you with anything that comes up in your home search, or to talk about what it takes to sell a home in today's market. So real quick, I'm going to talk about what the challenges are for move-up buyers in today's market. In today's real estate market, the inventory is literally at an all-time low. And we say that, you've heard agents talk about things, it's the best, it's the worst, it's the lowest, it's the highest. This is truly the lowest that inventory available homes has ever been in hundreds of years. So this is unprecedented territory, partly due to obviously the pandemic and partly due to other economic factors. Interest rates have made buying a home more affordable than ever. In today's world, you can buy a $400,000 home with 5% down and be at or under $2,000 a month in payment, which is really not much more than a decent 3-bedroom apartment is in the Charlotte market. Prices are beginning to rise, and they've been rising fairly rapidly, though, simply because of the supply and demand factor. And you have many situations where multiple buyers are competing for each listing, that making the bidding process even more competitive. And we're going to talk about ways to compete in that situation. Little graph I have here just shows how it is a very strong seller's market. And the company that we use rates it an 86 out of 100 as far as a seller's market right now, which is up. The gray bar is last month's reading and the red bar is this month's rating. So we do see this trend steadying and continuing, at least for the immediate future. What are the challenges of move-up buyers? Well, it's very easy to sell your house in today's market, although it's important to have professional help so that you sell it for the best price and amongst the best terms. But move-up buyers are having to consider seeking temporary housing. If I sell my house, what happens if I don't find the house that I'm looking for, or if, God forbid, that purchase falls through for some reason? Sellers in today's world don't want to hear about contingencies in the contracts. They want secure contracts. They're going to close quickly. And if they have to wait for someone else's closing, that can affect their timeline. And so that's something that they try to avoid. Not all lenders in today's market will give you full underwritten pre-approvals for the next house. So you may have trouble competing if you have a pre-qualification letter. And buying a house before selling reduces the mortgage that you can qualify for. Some people can qualify to have 2 mortgages at the same time, but they might not be able to qualify for the house that they really want if they do it that way. And of course, selling a house in a hurry in today's market, especially if you have to do that while you are under contract, in the off chance you get a contingent offer accepted, that can be very stressful. It can lead to harsher negotiations. if something comes up and you want repairs done, and that seller is not willing to negotiate, you may have no choice but to move forward because you have another house to buy as well, and your house to sell simultaneously. So all of these things have led to a little bit of market paralysis, which is why inventory has been so low, is because people have been afraid to make that move. And today we're going to talk about the HomeSwap program and how to help people make that move with a little less stress and a little bit more financial power going in. So I'm going to turn this over here to Dustin Davis. And Dustin has been in the real estate business since 2015. He worked as a realtor at a local firm before joining Knock in June of 2018. As an agent with Knock, he's consistently performed in the top 100 in productivity from local MLS data. He's helped close hundreds of transactions, all the way from purchase offers through due diligence and closing. He's with you through that whole process. Now, as a Knock lender since mid-2020, he's using his experience as an agent to help guide clients and realtors alike navigate this HomeSwap program. The HomeSwap provides clients access to the equity in their house, removes sales contingencies, and provides a fully underwritten pre-approval before a client puts an offer on a next home in this hyper competitive market. And the one thing that's been a real blessing about prices rising for people is a lot of homeowners have equity that they did not have 2 years ago. So let's figure out ways to help them use and leverage their own wealth in that perspective. So I'm going to go ahead and turn this over to Dustin Davis. Dustin, thank you for joining us today, and we appreciate your expertise.
Yes, thank you, Rob. I appreciate the opportunity. So I'm going to share my screen here. And luckily, team, every problem in this market that Rob mentioned is solved by Knock and our unique HomeSwap program. So what we have here, today's little agenda, we're going to identify what the HomeSwap looks like for you, how it works, what it's like from contract to close. And I'm going to open it up to some questions at the end as well, guys. So as a lot of you know, buyers are selling and buying at the same time. That's the majority of the real estate clients out there. And those are the ones who are best fit for that HomeSwap program, because you have that home, you have that biggest investment of your life sitting there with equity, and it's just waiting to be used. And the best way to use it, especially in this market, is to unlock that equity first, buy first, sell later. So your HomeSwap client, most of the clients out there, most of you buyers out there, they want to move now. They found that perfect house. You're ready to, like Rob said, you're going to buy up or you're going to downsize. It's up to you, but you have that listing to sell and your money is tied up in there. What Knock will do is we will provide you a portion of that equity to use for things like down payment, to use for things like closing costs. Oh, and by the way, Knock will also cover 6 months of your current mortgage payment, so you don't have to pay 2 mortgages at once. So all of that equity that we unlock for you is used to enable you to get into that next home without having to come up with that cash up front. A couple of stipulations here. The only thing is this actually needs to be updated. So it says 750K or less. It is now 850K or less. So that means the home you are selling, as long as it's not one of those high-end 850 plus homes, you will qualify for the HomeSwap, assuming you have some equity. Most people do. So what's in it for you guys? You're going to hit this market without a contingency. The way we do that is we not only fully underwrite you up front, like Rob said, we also provide you a backup offer. That backup offer is simply just to satisfy underwriting guidelines to remove your sales contingency. It's not an offer you necessarily want to take. It is an option for you. You can get more money on the market, open market, with your awesome realtor from the Wachter Group selling the home for you, but that removes your sale contingency. So you don't have to sell in order to buy. You have access to your equity right now, and you're already fully underwritten when you go out there. Those are the 3 things that sellers want. Those are the 3 things that we can provide you right off the bat. Impulse buyers, we can work as quickly as you. We have the same timelines as everyone else. We can close in 30 days. You find that perfect house, you're ready to act as quickly as you can get us paperwork, your homework. We can get you our homework and get you out there shopping right away. For other agents out there, this will also build their brand as well. It looks fantastic to be a Knock certified agent, because what Rob mentioned earlier is that all of his agents on the team are certified. And what that means is they're armed with the best thing you can have in this market is education. You know what is going on with the market, and you know how to best enable your clients to be competitive. And being Knock certified means you just took our training. You understand our program, you understand how it works, the ins and outs. You went through our app. Our app makes it so easy for everyone involved to get through it. And now that you're that much smarter, you're that much better of an agent, you can offer that much more to your clients. So the home swap, we're the only lender that does this. There are lenders out there who will buy your house from you. There are iBuyers out there who will buy your house from you. As you know, you could lose some equity. There are other options out there that have rent to own type of options. We'll advance you some cash, but that cash is sometimes, with a stipulation or a large fee. All of this is kind of, you're giving something up in this case, but with Knock, you're giving nothing up. You're selling your house for as much as it's worth, and you're unlocking what you already have in it ahead of time to make yourself competitive. So how does it work? We provide these three things: convenience, certainty, and cost effectiveness. So the convenience of moving first instead of having to buy and sell at the exact same time, as Rob mentioned, that can be very cumbersome trying to buy and sell on the same day. You got your sellers who have their buyers. They need to be ready on the same day you need to be. We avoid all of this by simply saying, go find a new home first, buy it, move in, then worry about selling your house. Oh, and you're going to sell it for as much as it's worth. Certainty. Once you get fully underwritten, you know for certain, and your sellers that you're buying from know for certain that your documents are in, you are good to go. This is the next best thing to a full cash offer. Cash is king, obviously. The next best thing you could have is a fully underwritten pre-approval, and that's what we provide you. So we get you all of that up front. Most lenders will start doing that underwriting a couple weeks into the transaction. Things could pop up. Your due diligence and your earnest money is at risk if something pops up and you have to pull out of a transaction. We cover all of that up front. Cost effective. Most lenders charge that 1% convenience fee. This whole program, everyone says, what's the catch? 1.25% convenience fee based on the purchase price of the new home. That's it. 0.25% is the big difference. Essentially, what we're going to give you is a home equity loan, typically thought of as a bridge loan. That is zero interest for up to 6 months. Up to 6 months is, hey, that's just basically get your house on the market and get it sold, everything's said and done. After that 6 months, obviously we can, deal with that as it comes. That backup offer is an option. Different ways to work on it. Knock on wood, no pun intended, that we haven't had to get there yet. So you should be good, especially in this market, to sell a house in 6 months, barring any major issue with your home. On our rates, that's another great question. Is our rates? We're as good as anyone out there. I've competed with new construction. I've competed with the big banks, and everyone ends up coming back to us just because of that convenience factor. And this is a no-brainer type of program. There's two components to the home swap. Everyone kind of gets confused. Hey, can I do the home swap? Can I not do the home swap? Knock's a lender, number one. We can do conventional mortgages. We can do VA. We can do jumbo. FHA's in the works. It's coming. But we can do a normal mortgage for you, regardless if you want to do a home swap or not. So the way you do this is you get approved for a conventional conforming loan. That means a loan up to $548,250. That's your loan amount. That's a conventional conforming loan. You got to have that credit score that's better than 620. You got to have, great debt to income ratio, and so on and so forth. Income, you can be retired, you can do all of this stuff. So as long as you can get approved for a normal loan, normal conventional loan, home swap likely will work. So what we do after you're approved for that conventional loan is we look at the equity you have in your home, base it on the sales price. We have our numbers we think it'll sell out. Your agent has their numbers they think it'll sell out. Chances are your agent knows a lot more than our algorithms do. So we're going to base it on that. That's your available equity. So you owe $100,000. Your house is going to be sold for $200,000. There's $100,000 in equity. You're not going to get that whole $100,000. You're going to get a portion of that, but that portion should typically be enough to cover your down payment, cover your closing costs, 6 months of mortgage payments so you don't have to pay 2 mortgages at once. And oh, by the way, we also can help you get your current home ready for the market by providing what we call home prep. Home prep is, hey, I need to paint, I need to maybe do some landscaping, new carpet, new flooring, whatever it might be. As long as you have enough available equity, let's say you have a $5,000 wish list to get your house ready for the market, you have that $5,000 still available in your equity advance, you can book them, we'll pay them, and then you just cover it when you pay back. So what happens with this is whatever money we advance you, it just gets paid back to us dollar for dollar, no interest, when you sell your old home. So essentially think of it as it's going to be written down or it's going to be filed as a second lien. You're going to pay off your mortgage. You're going to pay off the, let's say, $50,000 that we loaned you dollar for dollar. If you used 49,000, you're going to pay off 49,000. If you used 52, you're going to pay off 52, whatever it might be. So moving forward, we can get your house ready for the market as well with that home prep, get you that equity advance, make you the strongest possible buyer out there next to those crazy folks who have cash and who has that much cash anyway. But other than that, Knock really does kind of provide you the best option, especially in this market, to be the most competitive you can be. Again, back to that, how much does it cost question? Again, that 1.25% convenience fee, that's it. No origination fees. There's not a convenience fee and an origination fee. We just don't have origination fees in general. If you wanted to go with Knock as a VA or a conventional loan, no origination fees. So we're going to save you money right there just to begin with. Our bread and butter programs, that HomeSwap program, options are, if you want to come conventional, that's fine. Refis, we can do that as well. Maybe the HomeSwap you don't have just enough equity for the HomeSwap. Cash out refi might be the best step next for you. Next best step for you, sorry. And then, you can get moving that way. What does that look in the grand scheme of things? So purchase price about 150K, you're going to put down just 5%. 5% is the minimum you can put down for the home swap. We will cover up to 20% down if there's enough equity. So if you want to put 20% down, you have enough equity, we can put 20% down. In this case, that would be $100,000. A lot of people could have that equity, especially after this market and how everything's been going. Origination fee from a normal lender is about 1% of that. Knox would be 0. But our fee will come in at that 1.25% convenience fee, at 0.25% being the big main difference. Our lenders' fees, we have basically what we call an admin fee. It's underwriting, that type of fee that's normal. $1,450 is ours. That brings a big difference here to just at right about, under $1,000, $900 some dollars, $950 in this case. So for minimal fees, minimal costs, you're getting an amazing program. Most people would be very willing to offer $1,000 more on a house in order to be the winning bid, in order to have the strongest bid, in order to do all of this, pretty easily. So with that, kind of went through my spiel nice and quick. Rob, if you have any questions popped up for you guys, just
Sure.
let me know. We are open to some beautiful questions on this beautiful home, which could be yours.
Absolutely.
But other than that, guys, let me know what you got.
Dustin, thanks so much for going through that pretty quickly and concisely. And we do have a number of questions that have piped up. Let me see just how many we have. So we have 3 or 4 questions already. If you are watching this, and again, if you have questions, go ahead and drop them in the comments. If you're watching this recorded, we will still get back to you and answer those questions as quickly as possible. So the first question we have is, can a buyer qualify for more of a house by using this program than they might if they just qualified to buy the house and maybe sell theirs after they moved in a traditional situation?
Yeah, that's a great question. So it's going to be pretty normal. It's not going to matter one way or the other. So what you're going to qualify and what's going to be that basis is going to be your debt to income, how much money you make, how much debt to income you have. That doesn't change with the home swap or not. So if you're able to purchase a $500,000 house the traditional route without the home swap, you're going to be able to purchase a $500,000 house with the home swap. The difference being is we're going to be able to, provide that equity up front so you can make it a lot more convenient. But as far as your ability to get a bigger house, it's going to be the same one way or the other, whichever way you kind of shake it. It's just we're going to make it more convenient for you, or you got to go the traditional route.
Sure. I'm sensing that my take on that question is they were asking is, will the payments on the old house count against their debt ratio? In other words, do they have to have less house because they're carrying two?
Gotcha. And the answer is no. So we exclude that payment, and with that backup offer that I mentioned earlier, that satisfies underwriting requirements to not have to consider that home as a debt. So from the very beginning, that debt is excluded, and the only debt we take moving forward with debt to income ratios is the debt of the new home. So we look at that new home, and that's it, not both.
Super. Thanks for clarifying that.
Yep.
The next question is this approval as strong as a standard lender's pre-approval when you're competing?
It's yeah, absolutely. It's stronger in my opinion, because we go all the way through underwriting in the beginning. Like I mentioned before, most lenders won't put you all the way through underwriting yet. It's a strain on the system basically. So all of our clients go through underwriting up front. That pre-qualification does come pretty quickly, but pre-qualifications aren't anything really to do much. Most solid sellers out there, most agents will say, hey, we really want a pre-approval. And what we do is we literally send you all the way through underwriting, through human eyes on it, and they get pre-approved and you are good to go. Like I said, it's the next best thing to cash. There's cash and a fully underwritten pre-approval, and then, a pre-qualification, probably more way down further than that. But yeah, that fully underwritten pre-approval is as good as it gets in this market.
Great. Thank you for that.
Mm-hmm.
Okay, so there's a question about, is the extra cost really worth it? And I'm actually going to step in and give my opinion on that one. We have seen a market where prices have been rising in some cases more than 1% per month in certain markets. So I think the simple answer to that question is, if you can buy a house in April with this Knock program and sell your old house in July, not only will you probably sell for more money because you have moved out, it's cleaner, it's brighter, it's painted, but now if the market has continued to escalate, you have more than paid for that 1.25%. So I would encourage you to always talk with your real estate agent or your lender about what the actual cost is, but sometimes people get caught up in cost and they forget about value. So in today's market, that can actually be to your advantage. Do you have anything to add on that, Dustin?
No, actually, that is perfect. It's a great way. I was just going through a training where they said value is really what you want when you're in this. Cost is, it comes and it goes. You can buy items that are worth less but cost more, et cetera, but the value here, the strength you have, the ability to get that dream house at such a low difference in cost really adds a great deal of value to this product. And not only a value for you getting into that next home, but value for your sellers who you're buying from as well. You're a better buyer. You have a fully underwritten pre-approval, and that just the value, everything across the board just kind of raises the stakes.
Mm-hmm. Okay, we have one more question, it sounds like, at this point, and the question is, how does Knock handle a difference or a variance between a contract price and an appraised value? And I imagine where that's coming from is, in today's world, we see bids exceeding the asking price and sometimes exceeding where an appraised value might be. So how would that be handled?
Yeah, it's a great question. So traditionally and typically what happens when that is done, having been a realtor, putting on my realtor hat, you go back and you negotiate, hopefully. A lot of the times in this market, sellers don't have to say, I'll drop the price, because they might have a cash buyer available. They might have somebody else who has the difference. So in this scenario, let's say your sellers don't want to drop the price. Then typically what would be needed is the difference would need to be brought to the table by you, the buyer. Let's say the difference was $5,000. You're buying a house for $500,000, but it appraised at $495. So that $5,000 needs to be brought to the table at closing to make up that difference, because you're only going to be able to get a loan based on that appraised value. With the home swap though, let's say you didn't need any home prep, or you had a lot of equity. You have a cushion in that home swap equity advance of, you know, $5,000 to $7,000, maybe even more, $10,000. That can actually be paid for by that home swap advance up front. So we can cover that, so you don't have to bring it out of pocket. You can pay it back when you pay the home swap advance back when you sell your home. So there you are, still coming to the table. In a lot of situations with our home swap, you're coming to the table with zero down, or very little out of pocket, just because the equity covers everything you need. So we can definitely cover it as long as there's continues to be some equity.
So that's a fantastic way to look at it. And I know I've worked with buyers that have been willing to put that cash out to pay over appraised value. So just to be clear, this is not anything magic. They're still paying that money. It's just essentially coming out of the equity in their old house, so that they don't have to sell stocks or liquidate some other funds in order to cover that, correct?
Yeah, absolutely. Absolutely. You don't have to dip into your savings account. You don't have to, you know, pull out of your retirement account, which could, you know, have some fees involved. As long as there's that cushion available in that home equity advance, we can cover it for you up front, and you would just pay it back. You never would see them, and you never have to physically write that check. Just pay it back at closing like normal, just like you do pay off your mortgage, and it would be all set. Typical fees that you would have paid anyway, you're going to come out net the exact same in the end.
Great. Now, if for some reason there weren't enough equity, but they did have the cash somewhere else, is it okay for them to use that?
Yeah, absolutely. And in some instances, there's not quite enough equity to cover everything needed. Maybe the down payment, maybe they want to put a higher down payment, but they, you know, don't quite have enough. If there is a difference, the home swap will cover everything that they can. And let's say you got to bring $1,000 to the closing table, that will be known from the very beginning. Just the estimate of, hey, how much might need to be coming to the table. Like I mentioned before, in most instances, you're coming to that table with zero down, and still getting that $500,000 house and all this convenience up front when that equity advance covers everything.
Mm-hmm. Well, I think that's all the questions that we have seen today in this presentation. So we really appreciate those that have been watching that have added those questions. We hope we got the answers to you. If you need any more information, please just add another comment in there or call us. Our contact information was up there at the beginning. And in fact, I'm going to go ahead and put that up here again now so that you can take a look at our contact information. These are our agents. Again, Mel, Erica, Casey, and I would be more than happy to talk specifically to you about this. In fact, one of the first steps, if you have any remote interest in this, is to invite one of us to your home, and we can do a really quick screening on the home and the amount of equity that you have, and discuss what your eligibility for this program might be. And then we can talk about more specific details, how they would apply to you. So again, we would love to talk about this with you in person, so reach out to one of us. We thank you very much for joining us today on our show. And we look forward to bringing you more informative shows like this on a regular basis. Dustin, we thank you very, very much for your participation today and your insight and expertise. And we look forward to working with you on many client deals in the future.
Yes, absolutely. It was fun, guys. Any questions or anything as well, reach out to Rob. Any questions for me, just Dustin@knock.com. Very easy to get to, but Rob will be able to answer a lot of your questions. That app that he was talking about, that assessment, is a huge, awesome first step to see if you guys can, you know, hopefully have success with this program. But yeah, other than that, thank you, Rob, and I appreciate it.
Great. Thanks. Have a great day, everybody.